Hello guys, welcome back to my YouTube channel. This is Trader Maximum here once again. And today I'm breaking down this very trade idea I dropped on my free Telegram group on Wednesday, the past trading week. We actually caught this gold setup at this very snipe level down here. Got it here and we held it up above, the liquidities that were lying beautifully through these price actions here. So despite how unrealistic this very entry level actually seems, but like, trust me, check out the description of this video and you see the link to my Telegram group. You can see where I dropped this trade idea and you can see how it panned out beautifully. Now, over there in my Telegram group, I drop subsequent educational content like these signals and market outlooks day after day. So do yourself the favor, make sure you check out the description of this video and join the Telegram group for your development as a trader. Now, how was I able to catch this very level? What was the thought process that was behind me catching this buy trade from this very level here up to this high? It wasn't actually that very much easy. It is not just as as random as you might think, but like, sit close and watch me break it down to the way even a primary school student is certainly going to understand. Now, what was the first thought process? What gave me confidence? What gave me insights to look out for higher prices? This was the first question I asked myself. Why should I look out for higher prices or lower prices? Now, don't forget, whenever you are doing your analysis, don't always forget to start from the higher time frame. So I actually got my level from my higher time frame basis. I got my key level from higher time frame basis. As you can see this very high here. You can see, take a look at what happened immediately. Price traded down and touched that high. That was when we started seeing, this, movement, the upside. Now, what was the technical logic behind price reacting up from this very high? This very high could be considered to be a mitigation level. It was a previous high that got broken, that got traded above. It is to some breakout and retest traders. This is a perfect breakout and retest entry model. As you can see, as we had the breakout from this very high, price retraced correctionally into that same level, and as it tapped there, that was when we started seeing continuation of higher prices. Now, that was the first place I got my narrative from, the higher time frame key level. And after that, what else did I do? I went down to my lower time frame, and my favorite is 15 minutes time frame. Came down to my 15 minutes time frame. First of all, let me identify this as our mitigation level. Sorry. Oh, so sorry. I'm so sorry. Xauusd. Yes. So sorry for the little mistake. So let's identify this as our mitigation level. This was our mitigation level. Now, what exactly happened here? Like, I mean, the entirety of this price action, how are you going to break it down if you were actually asked to, break down everything that happened here, every single price movement that happened there? Well, the thing there is, none of these price actions were actually random. Everything that happens in this price, everything that happens in this market happens for a particular specific reason. Nothing in this marketplace is random. Trust me. It is that you just don't know, or probably you're just lost in the whole price action. But like, trust me, nothing here is random. Now, take a look at what happened there. As we had this first breakout from that mitigation level, from that very high, as we had the first breakout, we had this first retest of the zone. Now, what was actually here that was meant for the market to retest? There is a high probability order block that lied here. Now, for most of you that have been following my teachings, you can be able to understand what my high probability order block actually means and how to identify them. Now, take a look at what happened here. Take a look at what happened there. This is my high probability order block from this very level, to this very low. My high probability order block. Now, what made it a high probability order block? Let's look into it. Did it sweep liquidity? It swept liquidity. Look at this very low here. It's purged down. Look at this very low again. It's traded below. So this was the liquidity that this very last candle, this last bearish candle, before the impulsive move to the upside, this was the liquidity it swept. So this made it to be considered as a high probability order block by me. So I will consider that to be a stop hunt. I write it out as SH, just short form, stop hunt. But right, excellent. So after the stop hunt and displacement, as it was displacing, what can you observe here? You can see that it displaced impulsively and left a fair value gap. And as you guys know, other blocks that has an FVG close to it, it's considered to be a high probability order block. It is one of the things to put into consideration in picking a high probability order block. You can see your FVG right here. You can see it here. It's very perfect. Now, what else did I put into consideration? There was a structure shift to the upside. This was the valid of, okay, we can probably consider this very one to be our structure shift to the upside. So let's mark it out as MSS. MSS. Yeah, MSS. Then after that, what else happened? We started seeing price trying to trade into that our high probability order block. We started seeing price trying to trade into our high probability order. Let me mark out our order block as OB. OB. Excuse me. Okay, yeah. Let's stretch it down here. Don't mistake these very levels. Let me delete this very FVG. It is not that much necessary. But like this very other one here, this other level here is our mitigation level, our higher time frame key level. Don't forget about that. Then this other one here, this very level here is our order block, our 15 minutes order block. Now, let's stretch it here one more time. Now, look at this very retracement into this very level. Did this retracement traded into our order block? No, it did not. So this will certainly be considered as our inducement. This level, this low here, induced this order block. It induced this POI. Now, let's continue going forward. That wasn't actually the only time this order block got induced. And the more it was getting induced, the more I was having much more confidence in the POI. Look at the second tab around the zone, but like failed to trade into it. This was the first trade into the zone, but failed to trade into it. The second one and the third and the last one. Now, this level, everything here should be considered as inducements. They served as inducements to our POI, or POI being the 15-minute order block. Perfect. So this is an inducement to our POI. And finally, price traded into the order block, the 15-minute order block. We've been anticipating for price to trade into. As it's traded into it, take a look at how it displaced immediately. Although not really immediately, it consolidated a little bit. But after the short consolidation, you can see the impulse movement to the upside that led to these little structure shifts. You can see, although these aren't actually my perfect structure shifts, if at all price took out this high or this very one, that would have been my perfect structure shift to the upside. But like to some extent, this could as well be considered a series of structural shifts to the upside. And after we had that structural shift to the upside, what else happened? We had a retracement into the discount array of the previous dealing range. This is the current dealing range because to some extent we had a structural shift to the upside here. So it reacted at a discount just at the other block, the down closed candle that was printed here, and gave these, higher prices to the upside that was short-lived, setting some sort of consolidation, and towards the London session, towards New York session on Wednesday, after we must had this impulse move to the upside that led to my valid structure shift to the upside. You can see this high here. Before these highs, there were a series of other highs here. You can see this high, this is the high, these are highs, but like this could as well be considered to be more like internal structure shift to the upside. But like this other one here was a valid structure shift for me because it was the major high that was situated at the marketplace as at then. You understand? Don't also forget that the market was unable to create a new low here. As you can see, the market was unable to create a new low. See what the market was doing. Let's pick this out from here. Yeah, see what the market was doing. It came from this very high to this low. So this could be considered as our lower high. This wouldn't be considered as a lower low because it failed to take out this very previous low. So it just served as some sort of inducement, traded to the upside, traded below these two lows and, into our POI. And from there, displaced to the upside. But like, as it displaced, it failed to come down again to create, the continuation pattern, which is, reacting at the discount of this, it failed to, create its continuation of bearish market by, breaking down below this low and probably continuing its, lower prices movements. Then what did the market did? It failed to, trade below this very low, came back, created this internal structure shift to the upside. Can just put it as our MSS. Created the internal structure shift to the upside. And also don't forget, this was as we were anticipating FOMC news events, which is a very high volatile news event that we anticipated for it to, trade above these trend line phantoms that was built up in price. As you can see, this was a beautiful trend line phantom, which was situated. Price was creating series of lower lows and lower highs, and traders were certainly placing their stop losses at the obvious highs, like as you can see here, obvious highs like here, obvious highs, all these obvious highs, traders placed their stop losses there. So as FOMC hit the marketplace, it displaced and took out all the sellers that had their positions, at all these levels. Now, how were we able to execute? Now, let's go down to the candles price action. Now, this was actually the narrative behind my entry. As you can see, this is a low. This was a low. You can see we had some sort of key level here. We had some sort of key level here. So I was like, okay, it will make sense for price to come down at this same level before continuing to the upside. But like that wasn't just it. If you look closely here, you will see this very inversion FVG. This inversion FVG was this was just where I sniped in. Not just me, the trade idea I dropped on Telegram, this was just where all of us sniped in and we started eating from the market. It was just this simple, trust me. And where was my invalidation level on my entry level? It's actually very simple because this trade gave us, I think the setup I dropped, it gave us 1:10. And this was where I engaged from. My entry price was 2155. 2155. And my invalidation level was at, just above here at 2154. 2154. I think it was about 12 pips Excel trade. You know how crazy it is to trade gold with 12 pips. That's actually very crazy. Now, this was my, oh shit, sorry about that. So this was the way we actually engaged. And as you can see here, this was actually an order block as well. This was an order block. So there were lots of confluences that I was paying attention to. There were lots of things I was paying close attention to that made me come up with this trade idea. And as you can see, it did not just end there. It expanded all the way to the upside to clear out all the trendline phantoms, all the retail stop losses that were placed at just all these highs here. Now, my first target was actually at this level because I felt like, okay, price might decide to react off this very FVG here. So this was actually my first target. And that was a 1:10. Don't forget, I called this trade out live on Telegram for free. Check the description of this video and join the group for your own betterment as a developing trader. Trust me, you will never regret it. Now, this was where our first target was. Okay, not just our first target. This was the buy side liquidity. That was our first target. This is very high here. Was our buy side liquidity. That was our first target. Perfect. So this was our first target. And the FVG here, I felt like this might probably, lead to holding down price because there was some sort of the reaction here made me feel like, okay, who knows? Price might decide to retrace and, sweep out our low first before continuing to the upside. That's why the fact that I was so much certain that we were going all the way up to clear out this trend line. Now, most of my students that were texting me that very day, I encouraged them to hold this trade because I was so much certain about how it was going to pan out, and they ended up holding it up to this 1:30 plus risk to reward ratio. That was actually insane. You know how almost impossible it is to do this frequently. So whenever it comes out, it is actually very much appreciated. These are our buy side liquidity. The overall target. And take a look at what the market did as it's, traded above that high impulsively. Ever since then, started retracing back to the downside. Now, this was just the basic narrative. behind me taking this trade. Trust me, there was actually more to this trade. Like, I can't always give out everything to the general public. So for this very little knowledge I've just shared now, I believe it will, save you from, your subsequent trading days when you'll be lost in the marketplace. Probably some certain things I've said here will give you insights. They will serve as guidance for you to make a better trading decision. I think this will be just it for now, guys. Have a nice trading week ahead. Bye.